If you already own several $100,000 in crypto, but it mostly just sits there while you wait for it to do something, this episode is for you. As a fellow crypto owner, I know that at some point you ask, is there a sane way to leverage this asset for liquidity or extra return without blowing myself up? And if I borrow against it, how much can I safely use? Is a is a Bitcoin backed loan basically like a HELOC or a line of credit, or is it something that's totally different? And what actually happens to me if Bitcoin were to drop 60 or 70% while I have a loan outstanding? My guest today is Shawn Owen, CEO of Salt Lending, one of the earliest platforms using crypto as collateral for US dollar loans. He's been an entrepreneur and an investor for over 2 decades across real estate, hospitality, and technology, and has been publicly involved with Bitcoin since the early 2000s. Through SALT, he's watched investors use and misuse leverage on their digital assets across multiple cycles. And because he also personally invests in both real estate and Bitcoin, I thought his perspective would resonate with you. In this conversation, we'll unpack when it might make sense to tap your crypto for liquidity, how to think about how much of your portfolio to lend on, and where a product like Salts fit in alongside the tools you already know, like HELOCs, margin, and private credit. And with that, welcome to the show.
Pascal, that's awesome. Thank you so much for making the time. It's a pleasure. I know we had to reschedule the one time, and so I'm very much looking forward to speaking to your audience and to you and having a great conversation. Really big fan, so looking forward to it.
Yeah,
Hope I can add value.
if there's anything I gotta say about Sean's character, he showed up sick like a dog, just willing to show up even though he had it scheduled. So I appreciate that, Sean. So
You were a good man
look, I
for letting me
think
go.
look, I think this episode today it is all around leveraging assets you probably already have. If you're listening in, this is not a pitch for you should probably go out and buy crypto assets and then leverage them this way, although that might be a thought you have. It's really for those who already have quite a bit in crypto holdings. So before we dig into the leverage and the variation on the products you have, talk to us about, you were a real estate investor first and then got into crypto and eventually started this company. Tell us about what you did in real estate and how that journey played out.
Yeah, you bet. So I came from the work hard, be an entrepreneur, save, put it into real estate. That was my family background. Work really hard, be loyal, save your money, put it in real estate. And that worked really well for me from a very early age all the way until I found the idea of Bitcoin. And, I'm very grateful it was an early one so I could learn all the painful mistakes that most will have to learn in this new era, I would call it, a new technology. But at the time, I basically realized, both being an operator of businesses that cash flow, managing a lot of complexity with a lot of people and a lot of product SKUs, all the rest of that. In real estate, which is also complicated, but it's a different equation. It's a slower pace. It's got a steady, kind of predictable baseline. And that had been true. And this is before 2008. I'll talk on that too. And my grandparents had done very well. My parents had, and it was real estate all the way. And so I'm building that out and enjoying life. And along comes 2008, and I had just kind of went into a brand new property, was planning to get married, had just kind of doubled down on all of the investments, and suddenly was struck with I'm underwater 50%. And holy moly, I had no idea this could happen. What I did happen. And that sent me down this route of wanting to learn because it became clear to me very quickly in about 2 weeks. I did not know as much as I thought I knew about the way money works, and it was carnage back then. And so I, happened to start looking at hard money, gold, and other stuff. I just seen all my stocks get wiped out. I was not a stock guy. I had just started to get into that. I was real estate all the way, and suddenly everything I had was like arguably illiquid, right, or gone. And people were panicking. People that I would have never suspected, and so I'm now looking for information. I'm looking and hearing all these new voices. It's a chaotic time. And I hear about gold and silver. I start looking at that and I get lucky. Being a technical, I always interested in the future, futurist kind of technology angle. I hear about Bitcoin early on a podcast, and it kind of just sunk in as something that hey, if there's gold and it's needed, and now it just became obvious why, even if it hasn't been relevant for hundreds of years, it's relevant again right now, which is the first time in my life I'd seen that happen, then digital gold might be a really good idea worth looking into. And I kind of just got my mind blown in a way that never happened in my life. I fell in love with the idea in a way I didn't even know I had. It was just consuming all of my time. Every moment I had free, it would pop in my mind. I wanted to learn more, and I tried to mine it, and I tried to buy it, and all the rest of the things. But it was so tiny, right? You're talking like maybe it was trading under $1.80 when I really started looking at it, and it was super speculative. To find anybody to talk about it, I started going out and talking to people that knew about gold and silver, and nobody knew, right? And so there's just nobody to talk to. And I start looking at the potential of buying some of the stuff, but you'd have to do it on the internet with somebody named Morpheus or somebody named whatever. And like, you don't know who they are and you have to go buy a money pack. It just was hard. It felt sketchy. And there were some legitimate people out there on the internet, but it was a handful, but I was obsessed with it and I still am. And I still think that it's probably one of the most important financial technologies that has happened ever. And that's a huge statement, but we're also talking about the biggest TAM market there is, which is money. So anything that impacts that really is worth taking a look at. And that began a journey. And I knew after about a year or so, I really wanted to do something more than just buy and speculate and trade and lose money here and there. I wanted to see if it would evolve into something. And my wife had told me, like, you really just need to find someone else to talk about this. I don't know what you're talking about. Go out there and find some people. And so I started, I was still doing real estate, still working everything, but started the first meetup group. And just got it's like 10 guys, 8 guys every Monday or so, a couple weeks, would get together, have some pizza and talk about the thing. So you're doing the meetup, kind of meetup in person and just hear people out and see if there's validation of ideas. As it evolved, it started to become very clear it was just a matter of time. Like I was going to do something, and it meant that I would be pivoting, right? There would be a pivot coming. And eventually, after in 2014-ish, 2015, after a few different ideas that really didn't have the potential that, but there was momentum towards, let me figure something out with a group of people. This idea of salt came along, which was pretty simple, actually. And it was something I fully understood from real estate, is that if you have an asset and you want to save it for a long time, that you're going to want to borrow against it and get some more of that asset, or you're going to want to save it and spend something else. You don't want to spend it, right? Like maybe you flip house for a little while. I learned the hard way. For me, that wasn't for me. And so I was coming from the perspective of, I want to hold this thing forever. I see other people that are. If there's any long-term viability to it, then we're all going to need credit built on top of this. And kind of the idea of salt was, historically, humans survived off of salt being a preservation of wealth. Both you had to eat it, you needed it, it's in everything, it's an element, but also you cured all your meats and you could trade it for salaries. The word salary comes from salarium, which is from salt. And so this idea of this digital, fungible, choppable global currency as a commodity of salt, granular, really just stuck with the idea of Bitcoin being the same thing. And this is before anybody really classified it specifically. So it was kind of, what is it that best fit? The day came where it was time to just go all in, because that idea was one that I knew would be big enough. And it has been a huge ride, and it's still, I think, just getting started. But that's kind of what took me from being a purist from real estate and cash flow only to a all the way in crypto guy early. And I
Yeah,
could probably,
I get
there's
that.
a whole bunch in there missing, but there's a ton there.
Yeah. Tell me about, at what point did you start to realize that lending would be where you wanted to play?
So I had gone to a bank. I was looking at explaining my balance sheet to get a car loan. I had friends, people I really respected, say things like, even in the context of this idea, it'd be really cool if we could just get someone to recognize this is valuable, that we believe it's valuable, and we could lock it up and program it. So I'm sitting there talking to a banker, and it was great. He took me out to coffee after a couple of times of meeting him. He's like, I just want to be honest with you. Like, normally we just shut everybody's bank account down if they bring up the word Bitcoin. But, we like you and we think that you're legitimate. You've been with us a long time. So we're not going to do that. But just be warned, like, people are getting their accounts shut down. And all our board is like 70-year-old men that have white hair, and they don't know what you're talking about. You're really early to something. Nobody knows what it is. So I was like, dang, like, they're not going to approve my car. I've got this pile of money that I know is liquid. It's way more liquid than the other stuff I had, right? So that's why I started looking at this as a tier. Where does this fit as collateral? And it became just a confluence of, the IRS ruled that it would be, property gains you had to have a basis cost and sell it. So you're not getting out. That's not a currency, which is where I thought it would go, or could go. And I'm seeing it firsthand. Every single person around me would spend a little to participate, but then they just wanted to save. So it was just obvious. And I was like, nobody's done it. All you could do is buy and sell and trade and speculate, which is not, I don't think, for everybody, nor an infrastructure financial, like it's not going to change the whole world just having a new asset to trade. You have to build the rest of this out. So it just seemed logical that it's an itch I would scratch. Everybody around me seemed to feel the same way and seemed so self evident in a way that was probably super naive, but it felt like going all in on it.
Then you like called up a
We were the
friend
first.
and
Well, yeah, we
started.
had a group. So we had some co-founders that were kind of, we had a couple ideas that were more based off of credit card networks and fees and how to save money and save, how to solve cash problems for the dispensaries. Like we were going around about this new technology can do a lot of things. One of them is a good idea worth, pursuing. And this one was just an idea that seemed so right up my alley and made total sense that it was worth committing to, because I do believe it. It's, if you have an asset like real estate, of course you're going to have credit bills around it. In fact, money itself is built off of credit. If you really look at it, most likely historically, the idea of creating credit and lending each other things as capital to get more out of it is as old as you can go back. And so any new asset would have to have that. And if it doesn't have it, somebody's got to build it. It just seemed so obvious. The idea just kind of percolated into, got to do something. All right, what's the name? Come up with the name. Go, tell my wife I'm doing it. And if I'm crazy and I'm wrong, I'll go get another job and say I won't give myself 60 days. I wrote up a pile of paper in my office of, if I 60 days, and I'd count down, down to 30. And I think by day 45, it's very fast. Before it got to zero, within 60 days, we'd raised funding enough to get it going and kind of off to the races. And that turned into building prototypes and pioneering this out and getting legal advice and the rest of it. And things were kind of like lightning in a bottle, let's say. It was just awesome and amazing to be early into something like I knew it was going somewhere at this point. At the very beginning, you didn't know, right? You didn't know. But by 2014-ish and 2015-ish, I knew it's going somewhere. And it was the best time ever to just be building out a startup and have that energy and find something really innovative and cool. And that persisted until we did good in seed funding. We did good at kind of prototyping. We got good into scaling. We're ready to launch. We launched. It's really awesome. We've pivoted it slightly, but not a whole lot. Everything was Bitcoin at the beginning. Then it starts to become other things. Ethereum starts to become something that's talked about. And this was, now it's called like DeFi, but then it was just smart contracts and really was just programmable money. And Bitcoin, had some transactional cost. Then we hit the SEC and we hit regulators, we hit everybody else. It's like, oh, by the way, you're gonna have to play by the rules. We say, okay, we definitely need to do that. We don't want to get caught up in the wrong side of this. At this point, there's starting to be a lot of attention going on in crypto in general, right? And it gets a bit out of hand actually in 27 end of 2017, 18. I think it gets a little crazy. They start calling them ICOs and different kinds of crowdfunding and token issuance generation, this, that, and the other. And we had, of course, everything we're doing is crypto, 100%. Like we're saying, we're going to reshape finance in smart contracts, and so, we're now making good on that, saying, okay, well, how does that fit? We had the first registered investment advisor that was approved in Colorado for crypto, so we're talking to the SEC already. We're applying for building broker dealers and getting bank licenses. We're way too early for a lot of that, but we're front and center talking to regulators. And of course, suddenly the tone just totally changes. Like 2018, you are just bad news if there's a token word anywhere by the end of 2018, right? The poop coin, the word comes out and it's no longer are you innovative or cool or anything. You're probably a bad person, a scammer, and you all need to go away. And so suddenly we're like, oh wow, like that was extreme and got a bit intense. And so, but we put our head down and just said, the only way we're going to have a business is if we get good with the structure that exists right now. It's a perilous system. We're not coming saying, this is for money launderers or anything else. This is legitimate. There's legitimate people. And so we went down that process. It took quite a long time. Eventually settled out, not agreeing or denying in our position on whether we think tokens are or not securities, but clearly they can be sold as securities. Clearly they can be securities. And clearly everything could be tokenized, including, anything you can think of, real estate contracts, you name it. And I think that's the trend that we're on. It's just that you're real early. And so to see that play out now, to see Larry Fink and others talking about tokenizing everything is really ironic and hilarious, I think, back from those days. But now it makes total sense. That just progressed until we got our first loans out, got our first licenses out, continued down the path, and just been at it ever since, really.
And today
There's so
you're
much in
at
that one too.
like how many loans, how many assets under management? Give us
Y-
where you've
Yeah.
ended up.
So the basics of the business model for anybody listening, just to, because I don't know if we touched on that, is you got two parties, the third in the middle that's helping, whether it's technology for us, that's a company and technology. Party A is somebody who wants to build and preserve wealth and save in Bitcoin, a hard asset, the digital. Party B is somebody who wants to build and save wealth in cash and needs more cash flow. And they both are very synergistic because the Bitcoin can be placed and locked up as collateral to protect your investment so you're comfortable lending, getting some cash flow to get yield. That, in fact, has turned out to be, I think, a very strong statement. And it's true that I would stand behind. It's the best collateral that you could lend against, period. We have a 100% return rate to lenders. But in the early days, like what I mean by that, and this is no thing to glaze over, I guess, we don't have default rates that would impact the lender. The lenders have always gotten 100% of their yield back as expected without any loss. So that is the side that got overprotected. And the history to that was we were proving something new out. So the side that all the leverage was the cash saying, well, sure, I'll lend you, but I want UCC filings. I want to see what happens to bankruptcy, blah, 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 just down the list protection. So it's overprotection for that. And that's turned out to be a very safe and good thing. Of course, there's risk involved, but it's still a fact. And so you have these two parties, they get along very well in this agreement, but they need help being facilitated, just like you would need this escrow agent and a bank agent and a title company in order to properly do a real estate loan in a bank that's going to lend against the real estate, know how to perfect it and the rest. It's highly liquid. So it's, I would say, arguably much simpler in a lot of ways. And that evolves into product. And so that's just the foundation to make sure that I'm speaking to your audience, assuming maybe that some of them are just hearing about this for the first time, and then we could build on that, how that goes. But the numbers are, we've lent out in the billions. When you look at the total over about decade, we're coming up on 10 years of operations. The average loan book outstanding is in the hundreds of millions on average, and it rotates. Most people are treating this like a line of credit on the borrow side because the market's changing, and a lot of times it's augmenting your business or your cash flow events or your real estate in many situations where people want to have some combination of something that's a little less liquid versus higher risk and more liquid, right? So it works well to just be able to bank in that world like you would anywhere else. And really, that's all we're focused on, is just providing what you'd expect out of financial services at a bank on any other kind of transaction. We believe that that should exist for Bitcoin as an asset with all the same credit facilities built around it and all the tools and all the things. And we believe we're building it, and that we believe we're doing the best we can, and that we have the best products out there. Just because we've been pioneering it for so long, we've taken all the arrows when they come, front and center to kind of pave that way. And there's still a lot to build, but it's fairly robust between that environment of, do you want a long-term loan fixed? Do you want a shorter-term loan that you're going to be using as a line of credit? Do you want to blend it? There's people that are on both sides. I think just like in normal life, you'd have your bank, your savings, you'd have your real estate, you'd have your cash flow, and then you're constantly evolving and growing and building more. So that's the gist of it. The numbers we could talk a ton about. It's almost always like about a 50% loan to value. So if you assume you took a loan out for 100,000, 200,000, protecting it in Bitcoin is a simple rule of thumb, right? And it's a pretty simple, straightforward process, really.
And the returns are what I saw, between like 8 and 12%, depending on how long you were
It's
lending it
really
out
good.
for.
I don't believe it'll stay that way forever. I think the rates will get more competitive, but it's been a byproduct of junk bond rate yield being paid on the best possible asset that's ever existed. And why is there this asymmetric arbitrage? People don't understand what Bitcoin is still today, right? Like, it's still not known. And so you still have people misgauging the risk and misunderstanding it and mispricing it. And there's a lot of dislocation. Like there's a lot of money sloshing around the world, but it's not all totally congruent. It's not all connected. And so you have pools of liquidity all over the place. And to get those connected and locked out, the more sophisticated and grown out a market is, the more the rates will get competitive. But anytime there's any inefficiency in there, you're going to see some asymmetric return. And in this case, I would say the lenders are getting the better side of that, the investment on the cash flow side of it, simply because they're still getting the protection as if it's a risky hard money loan on real estate deal that's short term when it's not, right? And that's the only reason I could say that those rates are that high. Although I said that they were going to come down years ago and they still haven't, so it could take a little while.
Are they is 12% the highest it's been, or was it ever higher than that at some
No,
point?
we've seen rates. So if you're, I think it was the beginning to 2021, there was a huge rate spike. I think the first time we came out before we had all the money printing, and then after COVID, it kind of went reversed a bit here just another year ago. There was kind of an increase of rates when things turned again, and so we've seen rates as low as 2% on average to internally globally, but then on our side that translates to about 8 to 10. And we've seen his rates as high as 20+%, and sometimes in markets where it just spikes out of control for a bit, but it's an anomaly. It's just the credit isn't there. I would be willing to bet that most of your audience has not generated cash flow from a credit instrument based off of Bitcoin yet. I believe they will, for sure. But so that just tells you the money's not really there yet, right? It's not really connected the way that it probably will be in a few years.
Yeah, I think the closest thing I've done is staked my Ethereum on a proof of
Totally
stake
different.
network.
Right?
Totally.
Interesting and very much a real topic of conversation, real thing, but totally different.
Right. Right. Awesome. Okay. So look, let's get back to this idea. That was a great way to set the stage. Let's talk through it. So you're an accredited investor. I'm an accredited investor that has a $500,000 in crypto. Either I just have it sit on one of the exchanges that I have it on, or I can choose to put it on a platform like Salt or maybe Coinbase. And you mentioned there are a couple other competitors out there, which I want to get into maybe some of the differences here in a bit.
Mhm.
Is there, in your mind, if you're holding these assets, the thought here would be, why would you not lend it out on one of these platforms to get yield?
Okay, so I would approach this from a baseline of what are the real businesses that fundamentally, like the real transactions that will and always will exist, must exist, related to, we'll say, Bitcoin and cash, because there's this combination. So with the crypto side of it, you could do exactly as you said, which I would say you could go earn it. In the most pure sense, that would be mining it, which is really validating the network and running equipment and being a part of being rewarded for your proof of work to support the network. You could go earn it like you do mining for fiat, mining for dollars, and then you could go buy it, and then you're just sitting on it, and that becomes custody. And once you're working to convert into buying the crypto and you're holding it and it's doing nothing, I would say that that's a form of custody. And it's either custody with a third party or trusted custody. And the word custodian for a lot of people mostly means, a qualified bank or a self-clearing broker dealer or something where you have an institution that's qualified to be the custodian for you. I think that applies to some degree here, but there's a technical element also, which is you can take self-custody of Bitcoin. And that's one of the things that makes it very unique is that it's a bearer asset. It can exist just simply with you and nobody else owning it and controlling it without a third party. And that's part of the big idea is that it's peer to peer. And so you have custody somewhere, whether it's your own custody or you're splitting that with some other party, family members or institutions. You can go down the list. In this context, you're now saying, well, now what do I do with it? And in either of the custodian situations, if you're going to get any form of leverage or yield on it, you will have to have some form of additional layer contract or commitment into it. And that would be, to your point, if you lend the crypto out directly, now we're talking about an investment because you are the lender and anything you put out there most likely should come with the disclosure that there's risk in the fact that you're no longer the custodian. You own property rights to it, but you don't control it for the time being. And so that is now in the realm of what is that contract that is built upon it. I would call that digital credit because I think that's where it starts is that you have digital capital and you have digital credit. Or if you wanted to simplify, you just say you've got the capital layer and then you've got the custodianship of that capital layer. Then you have the control layer and the investment contracts that come around that. And the first one that we talked about, I think the biggest layer is credit, the ability to lend and borrow. And that's really what we do is that intersection right there is from the third party custodian relationship to the credit facility part of it, depending on if you're directly lending, which is not something we really do. We're not in the business of letting people directly lend out their crypto per se, although there are platforms that do that. And that is a market. It's not as big of a market as people who are looking to borrow against their credit, but they want something else. They're not borrowing Bitcoin or Ethereum, they're borrowing dollars because there's a component there that's different. So you could do pure lending and credit of the base asset, the capital, lending out the Bitcoin to somebody, or you can use it as the collateral, which is really where we more specialize, and then borrow or lend dollars, or a currency, let's say, or another asset next to that. There's of course the buying and selling, and then the frequency of that becoming different from investing long term into trading. And I think that's its own segment. We don't specialize in that. I understand there's always going to be a need for it, and that's a product that people will always want. But I think that it does not necessarily bode as well with the mission statement of building and preserving wealth. I think it's more of the speculating and potentially hitting it big or potentially losing it all. And that's a different model. So we don't get into that model. That's for somebody else. We stop at the build, preserve, repeat, save, and grow, but without the loss. We don't want anybody to ever take a loss unless they choose to. If somebody wants to dispose of the asset and it's an event that they time and they want to sell it because that's time for that to be used somewhere else, all for it. And that's why loans enable for the difference in time, the ability to time out when you would sell the asset, right? Maybe you want to hold the house a lot longer, but you need some cash to do a remodel. Obviously, that's where a loan comes in. Same model. And that's really where we stop, right? That's plenty we could talk about in the sphere outside of that in the market, but we pretty much stop there. Treasury management is a big topic that comes out of that.
Yeah, so I'm assuming that if you own any crypto, there is no reason you are not trying to leverage that asset in another way for cash flow.
With the caveat that I would say there's a good argument to be made just for people thinking through this, that just saving the old school, like what our grandparents did or great grandparents did, where you just work hard and you save, that's a good model when you have a base layer that is appreciating, hundreds of percent over time. That's not a bad model. In fact, I think it should be the default. Personally, I think the default should be get back to the simple world because I think, and this is just me expressing opinions, not advice or anything, but I think that we've grown up in a world where we feel we must go get the yield, we must invest, and we must be out there actively both working a job, taking care of a family, or doing our part as citizens, and also being great investors, which leads to a lot of potential for loss. I think when you're chasing the yield curve, when you're out there feeling you have to keep investing all your money. But when you're hearing cash is trash, this is a hot potato, this thing's depreciating, getting inflated, blah, blah, blah. What are you going to do? Of course, you're going to want to go put it somewhere. And so we find a lot of the use case in people just converting the cash into the asset to start and saving that way. And that fits. But yeah, just to be clear, because otherwise I'd feel like I was only selling our model as one thing. I think it starts with really good, responsible work ethic and earn as any humans born into the world. And as you have proof of that work and what you were able to save, save more than you spend in a form like Bitcoin, that alone will do wonders over a lifetime, like wonders, right? But there's the need and the want, I think, in a lot of practical applications to leverage on top of that, without a doubt. There's lots of scenarios that you could need or want to use products beyond that. And then of course there's also the need, there's in a free country, you should be able to just invest too. If you can go to Vegas and throw down black, should be able to probably put some investment out for yield. I think that's only fair. So there's all the layers, but there's me at least making sure I don't oversell one thing.
Yeah. How would you compare using and it's not just Bitcoin that you're doing. It's all kinds of crypto assets, right?
Down a select, I would say a select list, but full disclosure, to 90 plus percent, 95% is Bitcoin. And I think there's a few factors going on there, but over the years, we've attempted to kind of always be at the forefront of checking out these other assets. We have a portfolio approach because we think once the whole world is tokenized, that's the most logical way that this would progress is that you'd have combinations, not just singular one asset, one currency, but you might want to blend out the volatility of one asset with another. For example, putting stable coins or dollars next to your Bitcoin in your portfolio is not a bad idea if you're worried about volatility. Same thing goes for maybe having a basket of the top three. So we do have that capability. I would say the narrative with the Bitcoin strategic reserves and the last new kind of administration being very pro, bring it back on shore and let's support the growth here and be the dominant place in the world for crypto. I think that's really been focused on Bitcoin more than anything, although there's a lot more going on for sure. Definitely worth understanding and tracking if you're interested. It's been Bitcoin, and I think it's going to remain Bitcoin for quite a while. Like if you're a company and you're thinking about really moving some significant money into this as an asset for the first time, Bitcoin is the right move before you go to anything else. I think that is a very strong opinion, but it's also proven with a lot of evidence that that is where you're going to be best to start as something that preserves wealth, as one job and only one job. And that's just to help you save your money. That's what Bitcoin's designed to do. It doesn't do all the other bells and whistles. Those are for other things. That's more when you get into having some throw it on black money, or play around money. That those are great, but they're different. And so we see the majority of all of it still in the base case of Bitcoin on the balance sheet, Bitcoin pristine collateral, and what's coming will be portfolio products and credit, products built all kinds of products built around that, and that will include plenty of other crypto
How do
for
you
sure.
compare using, you know, uh, Bitcoin as collateral to more traditional levers that we might be used to, like HELOCs on your house or a margin
Yeah.
loan on your brokerage account?
I think that's the best way to think about it, actually. I still think that you go down the wrong path if you consider it like an equity or think it's a margin account or any of that. It's just not really as accurate as if you think about it more like a property. Like there's the earth, there's only so much land, there's only so much Manhattan, there's the Bitcoin, there's only so much of it, and that's all it's ever going to be. So the easiest way in my mind to think about this is just take two things, right? If you're really involved with real estate, let's say you own property and you're managing it, and that's a portfolio. Imagine if half of that was the same exact thing, but the revenue is supported by a different kind of cash flow that's on top of a different kind of collateral. But really, Bitcoin and real estate are very similar, with the one distinct fact that you can't natively get yield on the Bitcoin unless you're lending it out. So if you're going to be rent seeking with that, like you would with real estate, if it was a rental property, that is a model that's different than collateralizing it. And there's a hybrid where you can do both. But if you just think about it, those two 50-50. So now I have a portfolio of real estate, let's say assumedly rental cash flow that I'm servicing, some debt on that makes a yield on over time. And then you have Bitcoin, slightly different tax rule heading in the same direction, both thought of as something that you would hold longer term. It makes for a very good portfolio. We see a lot of people that will go back and forth between the two because you can augment the cash flow of one to the other and you can get a different time risk profile, duration risk improvement, I would say, by having a shorter term liquid instrument that's also there as a piece of property versus just having real estate only. So I think the big market, you see some big influential people like Grant Cardone's going all in. He wants to have the biggest version of this. There's no question in my mind that is where we're heading, and we are very much focused on how to help companies do that because we think there's this very good synergistic relationship between the Bitcoin investor, the real estate investor, the banker, the mezzanine debt, all the rest. There's really good combos that you can have here where investors can make a lot of great investment products that are traditionally already kind of known with this new augment that adds value in a measurable, tangible way, new products.
Grant Cardone said that he wanted to become the world's largest real estate Bitcoin investment fund. Did I have that right?
He did say that. And he
Yeah.
said
How
it
does that
in a, I mean, the way I interpret what he's saying is pretty obvious to me. Like I was seeing that coming for a mile away. I'm wondering why it took him so long. But he's there and he definitely sees it. And he's not pitching anybody on anything new other than he's got this plan and all the money coming into these funds, half of it's going into Bitcoin, half's going to real estate. Is really good move, in my opinion, because that treasury company does have the legs to get pretty big, and be worth a lot of money. And then when the rest of those investors start seeing that, it's not like it's an either or, it's an either and. You got what we're going to do anyway, and that's protected and baked in. And then, and by the way, we saw this X% increase CAGR on the base of the company equity. To get it to go public, somebody's going to do it. He's got a good shot at it, right? If I had to put some bets out. So I mean, I see that we've actually done some pilots. That's something we want to do a lot more of. We think there's a whole ton of people that could benefit. I think it's the age old, longest running safe investment, let's call it, or secure, sturdy, known asset to man. It would be what, gold and real estate. I'd say real estate probably is the more applicable one. And now you have this new, still only, it's still very new, but very much kind of in the same realm and growing quickly, that changes that because it doesn't have the flaw that gold has that prevents it from being applicable. Gold works well in certain applications, but it doesn't have certain attributes, and Bitcoin does. And so I think there's going to be tons of potential in marketing and potential for products that are just similar to that thesis of this is better if we put these two together in good creative ways. And so we're banking on that. We have a lot of kind of groundwork led for that if anybody's interested, for sure.
Talking about gold and silver right now, we're talking thesis at the moment around at Bitcoin. What's your take on what's happening with gold and silver and why we haven't seen the same kind of rally with Bitcoin?
Two good, very good questions. So, I got into Bitcoin because of gold. I have no way of getting around that. And at some point, I just simply lost interest in buying gold. I used to buy gold and I don't anymore. And it became clear to me at a certain point, like there's no reason at a certain point, maybe you have some gold, but at a certain point, there's no more reason for me to own this when I would rather own that. And it does, for similar reasons, a better job, in my opinion. Now, different risk. And so maybe you take the same approach, you blend it half and half. Gold has been saying it was going to have this run up for a very long time, right? And it finally kind of showed up. And so good on the gold bugs. Now I have my own thesis and theories we could get into. I think a lot of that gold money is going to go into Bitcoin, but it's a matter of certain ways of getting that price to a certain place and the way that it can be leveraged on a much more strategic, large level at the government sovereign level. But they're very comparable. The second part of the question, why hasn't Bitcoin seen that this year like everybody expected? One, I think there's a lot of interest that set up that wants to see the end of a 4-year narrative that was kind of a legacy narrative from Bitcoin from the early days that just really doesn't apply as much anymore. And I think now is officially dead. I think that was in the cards that needed to happen for a lot of reasons and did. The market loves to punish anybody that thinks they know exactly what's going to happen. So if the more you get people thinking they know exactly what's going to happen, it doesn't. So there's that at play. And then I think there's this other element, which is, gold's having this run up. The world's got a lot of interesting macro going on, and there's reason for that. And Bitcoin tends to trail, maybe not precise, but with the M2 supply and gold and some of these other things, it seems to usually follow. And so, I think we're going to see a lot of that people are expecting this year, not last year, and maybe even pretty soon. But there's no way to know for sure, right? Those are just my opinions, and I think there's some interesting supporting evidence for all of them. But what I'd love to hear other people's too. That's just my take.
Yeah, and that kind of leads me to it we Bitcoin was at 120, 130, and now it's come back down to this 80, 90 range. What what happens in that scenario if you have a loan on a platform like Salt?
Yep. So we have three kind of, you could think about it in super simple one, two, three, or all the way to the left, all the way right, and then center. We've got product number one, I'll call number one all the way to the left. And that is what we started with, which was prove to the lender that you can make good on the lender, which means it comes the risk that if you don't make good to the lender, they can sell some of your collateral. We will help. We have the rights to help them perfect it if you walk away or if the market goes to the whatever. And this was all towards answering the one question, which is what if Bitcoin goes to zero precipitously? How do I know I'm not going to be the one holding the bag? Okay, so that would be called your traditional margin call, collateral call, keep excess collateral, borrow responsibly. and know that we're going to do everything in our power to communicate that consistently with you. But there is the risk that if the Bitcoin's going to zero, you own something that's going to zero. And if you owed somebody money, they are going to want that as a stop loss so that they don't lose their money, because their bet was not on Bitcoin. Their bet was that you would pay them back. Now you move to the center, and this is something that we realized needed to be a product and added it on. We call it stabilization, which is a trademark. It goes along with stable coins, which is something that's really getting a lot more narrative recently. But I think it's easier to understand as an extension of time. Like if you're at a parking lot and you're at a great event and the meeting's running long and you got to go to the meter and put a little money in, you just need a little extra time. Now with the margin call, a lot of times people are at a wedding, they've been planning for years, they got a big event, it's the weekend, it's a holiday, and the market's crashing. They got conviction. They're gonna make the margin call, but they just don't want to make it right now. They just need a little more time. So we call that stabilization. We'll just freeze and pause the thing. They indicate to us, I'm good for it. We're going to cure it. I don't want it to be closed out, because there are some people who would want it closed out. So that's a decision. It's an option for people to choose based off of full disclosure of what's best for their circumstances. But that's that middle ground where, there's a good reason why somebody might want you to sell and pay down the loan to just cover it. And there's a good reason why somebody say, just give me some more time. I'm at a funeral, wedding, or life event. That's the middle ground. Then the third one, which is what we've just rolled out recently, and it's in the same vein of kind of blending out products different ways with real estate, but it specifically says, I just don't want any liquidation. I'm the borrower, I'm good for it. And full stop, don't call me. If I'm at a wedding, don't call me. If I'm at a funeral, don't call me. I'm never selling. I am a no sell guy ever. And I want the package that's got no liquidation. I will make good on it, period, but no liquidation. So we call that shield, just because it kind of it's a symbol of protection, and they just want the ultimate protection. That's all the way on that side. And so we've covered, I think, all combinations in that spectrum that can exist. If you just were to slide a scale, could create versions of that. But very proud to be able to kind of have pioneered those out for the best interest of both parties. Like nobody wins, including us, if people aren't getting the outcome that they're shooting for. If somebody's losing wealth, it's not good for us. We don't have a dog in that fight. We do win if everybody else wins. And we know that our success is predicated off of both of the parties winning. It's not a one versus the other, and it's not a zero sum. It's a win win win. So the only way to get to that was to have all three, in our view.
So you basically, as the lender, get to decide where you want to sit.
As the lender, for sure, you are choosing. As the borrower, too, I would say both parties are choosing their profile. There's different products for different circumstances, right? And the versatility is what gives people flexibility, which is a better financial freedom for the outcome, is you want to be able to customize what it is for your needs. So we really lean in as much as possible to that reality, whether it's shorter term, longer term, fixed, variable, combination, sliding scale, right? Those parameters, there are not infinite amounts. There's only so many different ways you can carve up a loan, collateralized loan. But we think, again, that building out financial tools that you would expect in the financial traditional system based off of traditional assets like dollar bills and real estate, you should have all these somewhere. Somebody should offer them. We think you should have all that for Bitcoin as well. And so this is just a way of knocking them down as they show up to give the market demand where it needs to be.
What is the spectrum like? Okay, if you're a lender who will add money to their account, if Bitcoin drops, then you will get a higher interest rate. You can expect more of a 12%. And if that loan is only out for six, you're willing to have that out be for 3 years. And then on the other end of the spectrum, someone's only leasing
Right.
it out for 6 months, but they're like the shield person who doesn't want to ever get liquidated. What does that spectrum look like?
Right. And to be clear, the shield one is a good example of, on one side, let's say you're introducing another lender that is willing to write credit. Like if you're going back to real estate, 'cause I think your audience will appreciate just the analog. There's a lot of ways that you could write a letter of credit from a bank or personal guarantee or a cosigner or a way of stopgapping or a secondary uh, set of deed stacking where you fit and all this. There's a lot of things that have been created for a lot of good reasons. And in crypto, it's no different. It's just a different asset digital, but the infrastructure is different, but the concept of finance is still the same. And so really, you have a side letter agreement that says, look, I've got backing of excess collateral beyond any shadow of what would be needed to make the lender whole. And we've given the first right, the senior position, as you might think of it, to the lender, such that we don't need to worry about a liquidation. If you have a non-senior position and there is that actual risk of the asset being potentially underwater for some period of time that's unacceptable for the duration, then you can't do that. So that's got to go over to the middle or all the way to the left again to number one. And in between that, you could really get granular if needed. And because we're in the middle and we have the ability to create that leeway, that's the benefit of having a platform, right? Versus just if it was all programmable, you'd have to program every one of these things. And eventually, long enough time horizon, we will. That'll happen. But today, you need all of that infrastructure in order to get everybody what they need institutionally. That the grade for all those products exist. It just takes a lot of understanding where people are at, what they want out of it, and how to customize that position. So we're helping them build and preserve wealth.
Can you give me an interest rate range and like a
Sure. Yeah,
duration
sure. I
range?
mean, let's call it on the interest rate market driven, of course. You're somewhere between, let's go on the ultra conservative 6%, 4 to 6%. Like there's absolutely no way you're not getting that money back, but it's commitment, and you've got the flexibility on the liquidity side, short duration, so it's not going to pay you out as much. Up to
6
20%.
months short duration? What
Yeah,
kind of
let's
short
go.
duration?
If if you have something that's more perpetual, now you're talking more like 30 days. Like if you have the ability to just close something out, that means there has to be the liquid cash, like a money market or something supporting it, such that you just can't put it to work for as long. So of course the yield's going to be lower. I think I always do the XY on these, right? You've got duration, which would be time, and short versus long. You could go from 30 days to 30 years. You've got liquidity of the asset, right? Like how easy is it for this to just be moved? Bitcoin being very liquid, especially if it's just sitting there ready to go with contracts around it. So it's instant. It can be instant versus something that's just totally locked up and it's locked in contract, where it's more like real estate that cannot be touched, and it could be anywhere from 30 days to 30 years. And so between those two, you get this range of a dynamic understanding of what the market will demand between those two variables. And you can get more complicated, but I don't think you need to. That's really the main point of it, right? It's just understanding that scale.
Yeah, so 4 to 6 and as low 4 to 6% and as low as 30 days and as high as 20% and 30 years.
Yeah, exactly. So those, and they, of course, I'm not making offers or investment advice or any of that,
Yeah,
but
yeah, yeah.
quoting, that's the range. So, and the range can be specifically quantified pretty easily into the standard package, the thing that just is off the shelf, what people go to most of the time, or we can build it out and customize it for size the way it needs to be, and match it out differently. But the principles are always the same. You cover the risk by having the asset liquid on a shorter duration, then the yield is being generated on a longer duration, so that you never have one party needing the thing before the other party is ready for it to be returned. And you make sure that you cover out the risk by being connected to the market and having the right parties involved and the right protection in place, such that you can be assured that the way the contract's going to roll out from beginning to end operates the way that it's designed. And that's all you're looking for, is to make sure that the portfolio is built in such a way for both parties, all parties involved, that is spread out. You could get ratings on it. You could understand it. You could put it in a normal bank situation. That will happen eventually. I think that time's coming, right? But
It
there's
is.
this
I think
vetting
it's here.
period.
There was something around JP Morgan. I'm going to
They all
misquote.
say
Like
they're here. This
JP.
is where we get into the competitive market, right? So this is the only caveat I'd say, because I do believe the time is now, but I've also been the guy that was always way too early. So I'm calling my own bias here. I have a tendency to see the future a little too early. That being said, there are these companies making these statements, right? So the way I would look at it is, when you see the tweet or the headline go out, which I always get everybody texting me every time when this happens. So I see all of them. Chase just said they're doing Bitcoin lending, right? Well, what they really say is, we're exploring, or we're considering, or we might, right? We're exploring Bitcoin back lending, right? Like that's a low risk way of putting it out there as a feeler and having no commitment to actually do it. But the market will see it oftentimes and say, Chase Bank's doing Bitcoin lending now, right? Which is not
Right.
true, but it's an indicator. And I do think that the trend is obvious. right? I don't see the trend reversing. Of course, again, I'm biased because I've been believing that trend is coming and have been right about it up until now. And so I'm assuming it's going to continue, that Bitcoin's going to continue to have adoption the way it has. And I think that is inevitable, that you'll see many more products from the people who are really getting involved with the ETFs and the IBITs and the structured products, and basically the derivatives built around Bitcoin, all the way down into the base layer of the actual Bitcoin and everything in between. You'll see all of that eventually, whether you want to just call it banking, if you want to just call it finance or money, right? You're seeing a parallel system be integrated and synthesized into an existing system.
What do the competitors look like for you today? I know that we mentioned that Coinbase has come out with a similar type of product recently in the last couple months. I'm sure there's got to be others, and I'm sure there's like pros and cons and variables to them all.
For sure.
Walk us through that.
So I think for your audience, the one thing to get out of the way, if you just go back to the kind of ends of the spectrum, DeFi, where it's out there on a chain like Ethereum or Solana or something else, where it's completely decentralized or programmable, at least that's the way it's sold. There's no bank, there's no traditional finance. The whole thing is tokenized and smart contracts. That would be on one side of the spectrum. That would be the trend that shows you the innovation, but that's also for sure the highest risk and the biggest learning curve, and by far and away where you do not want to go unless you totally understand where you're going, because you are in cutting edge territory where things go wrong all the time, right? So it's really fun to be there and to play and learn, but it is not where you park your generational wealth at all. And so it's important for me to say that because it is comparable in a money market that's decentralized, and what we build, it's comparable in concept. In practice, very different, not even in the same universe, really. And you can see how one can become the other, but they are not the same. They're different. And so this is also true of most of the competitors. And that is the lens of jurisdiction. So we're US based. And so we're always going to have a bigger dominant presence from being not only the first company to really commercialize this idea, but US centric. The majority of everything we have is in US state licensing first, and then we've expanded out where there are other competitors in different jurisdictions, which are going to have a much bigger market there, regardless, because they have been the first there. And so there are some companies. One notable one that's been around a very long time is Nexo, very much an offshore presence, more of an Eastern European. Used to kind of have customers here, has kind of really stayed out, and you see the world kind of being split up from a regulatory landscape to jurisdictional rules, and also from a language. Like we will always prioritize going to an speaking continent or jurisdiction first, not because we believe it's a better language, but because it's easier to support, right? It's just a simpler business model for us to roll out and easier to partner. And so there are these patterns that you see that you have to keep in mind when looking at competitors, is who's going to be in the jurisdiction that you're situated in, where you're going to have the most protection. And I would say, why are we so much more safe and understandable than, say, the fringe out there? If I'm just calling it what it is, well, we have our names registered on more fingerprints and documents than you could imagine, in more states than you could imagine. And there are people who are accountable in court systems that have precedent. And there's rules and contracts that can be enforced, and there's support. There's all these things that come along with that. And so you have to look at that when you're comparing the two, that they're just not the same, right? The rates aren't the same. The cost isn't the same. The infrastructure, user experience isn't the same. And let's go Coinbase, because Coinbase, actually, I'm a big fan of Coinbase. They've been around a very long time. I think they've done a phenomenal job with Brian at the helm, from being the first place you could kind of buy Bitcoin reliability to now the everything finance app, with AI included on top. He's built a great company, and I think I wish the best that they continue. I also know that, when building the everything, you get diluted a little bit because you have many different priorities. And so you're comparing, say, a company that offers everything to everybody versus a specialized unit. Depending on what kind of flexibility, customization you need and or preferences, you're probably going to get the boutique or the more customized experience with somebody that just does the Rolls Royce or the Lamborghini version of that versus the one that you can get anywhere. But I also think that they had a go and then a stop and then a go again. And so I think they're rolling it out mostly around their base layer, which is a secondary Ethereum based network. And you can borrow against Bitcoin. I haven't done it myself. I'm sure it's a good product, but I would say it's probably more of the basic. I think most infrastructure there is designed for more of an Ethereum build out, which has got a lot more programmability or customizability, but also it takes more to learn, right? It's not my mother's not going to go there, right? She's going to need more of the boutique white glove hand holding, do it right. Don't want to worry about it. I'm not going to learn how to go connect the wallet and do all the things, right? That's not going to happen for a certain segment. And so you're going to have a spectrum, I think, across this from different institutions. Eventually, all the banks will have some similar version of that too, however long that takes. But it's getting a lot more competitive, and I think that's been a sign of validation for us. We've kind of been on the great up and to the right curve of you guys are doing something cool and crazy to the you're probably all criminals and Biden's going to throw you all in jail to everything's great again. It's all US centric. So we've been seeing this come and now watching the treasury companies and the public companies and the sovereigns adopt and understand this has been quite fascinating to watch and I think pretty validating, but also kind of obvious. Like, of course, it's a big, big world. It's a big, big market. You're talking about all of the money. You're talking about all of the value of all the humans. So it's like it's unbelievable how to measure how big that is. It's a very big world. So the competitors, and I don't try to focus on competitors too much because I think, like, honestly, that's not what I'm competing against. I'm competing against our own benchmarks and how to integrate with the bigger economy. The more that we see validation of other lenders doing different versions of this, the better, because it's creating that proof and diversity. And I think nobody would want to live in a world where there's just one bank for the whole world, right? One centralized thing that would never be good. You need that competition. And you need it to be integrated across the board for distributing the risk and all the rest. But I do like watching what people build. People send me stuff all the time, and usually I'm like, don't touch it. It's scary, but that's just because of too many years of watching people do the wrong thing.
Yeah, you mentioned. So I'm going to nerd out here maybe a little
Yeah,
bit,
go
but
for it.
when we're talking like DeFi, decentralized finance, I've invested on platforms like Curve and
Mhm.
Aave and Balancer. Are those like considered competitors in your world if you're investing in these liquidity pools and you're getting some sort
Competing
of
for
yield?
capital,
Or
sure.
that's
Yeah, yeah. Like if I
okay.
mean, all things considered, again, going back to competing for just you as the person with the money have infinite potential of where you can put that money, right? You can go anywhere and somebody will take it. Uh, so given that caveat that you are talking about the competitive nature of just where to put money, where it gets a little bit more direct of a competitor is when you're talking about lending and borrowing assets and yield generated from such activity. Where it's fundamentally just absolutely different is that in order to go on Curve, at least the last time I used Curve, you had to have an Ethereum wallet. You had to have some Ethereum. And you need to know a little bit about what you're doing,
Yeah, you're
right?
it's very technical, not for
Very
the
technical.
average person.
No, and even I would find myself like miscalculating things and I would consider myself an expert, right? I've done all the DeFi things. I've checked all of them out. And I stand by the fact that it's nothing against my parents or their generation or even a lot of people in my generation. It's just that I like technology and I like to geek out. So of course I did that. To expect that somebody else would do that for a product is not realistic. So it will stay a nerd out niche for sure. Just like I like to geek out on AI models right now. Most people are still not even exactly sure how to use like a ChatGPT. I've gone down the rabbit hole on all the models. That doesn't mean that other people should, right? Or that they even could. And so with crypto, I think that's probably the big thing is that you could go down these rabbit holes for forever. Like I've been 15 years of something. I still feel like I don't know nearly very much, right? And I've been trying to learn all of it. So, that being said, you're embarking on a complete change in your way of thinking about money. Most likely, it will change the way you have thought about the world in many ways because it's a different system altogether. 100% when you take the intermediaries out and you're going one to one globally in a programmable infrastructure, it is not comparable. And so that is true all the way down the spectrum, right? And so Curve is a great example. I think some of those protocols are really innovative and really cool. And I think they'll have a role to play, but most of the time they are mimicking and or taking something that has been done before and then implementing it in a new technology suite with some new things that you could do because it's programmable and it creates something that's really fun to go play with. And you might make some money, you might probably lose some money, but if you write it off to I would have spent that on coffee or I would have spent somewhere else, I think all good. If you're treating it like an investment, I think you should for sure expect the reps and warranties that come with investment grade products, right? Like think about it that way. Yeah, maybe it's investment, but you're probably just speculating or playing.
Yeah. So
And they're
I think what
fun,
I'm
quite
picking
honestly.
yeah, what I'm hearing or picking up here is like salt is around the average consumer being able to kind
Yeah,
of
let me be
use
more
an inst
specific because I think we were
yeah.
nerding out. So salt is definitely the bridge from the traditional financial world that exists that everybody knows to this new world of Bitcoin. That is what we are. We are a bridge. We're a bridge between these two. We're a scaling solution for people who need time. Because if you want to save longer term and you want to build more wealth longer term, the odds are very high that at some point in time, you need somebody that will back you and give you credit to get there so that you can do it properly. Doesn't mean you have to do it that way, but we offer all of that because we see the future that is built out in what you were describing with these other protocols. It's inspiring and it has the potential to reshape the world in a better way. I think a much better way, like a very exciting future. But you have to build all the things responsibly side by side and integrate them carefully. And it's technology and it takes time. These things have to be flushed out. And so I treat most of the stuff out there, not what we do, as we watch very closely, we learn, we see, we support, but that's not what we're doing. We're not taking that risk at all. And that's not because it's a bad risk to take, it's because it doesn't fit what we're doing. What we're doing is helping people bridge over into a world that feels very familiar. Like it should feel exactly like what you're used to with banking. It shouldn't be any different. We're just giving Bitcoin and cryptocurrency the credit that we think it deserves, that it should have all of the financial services built around it. So if you want to build wealth and save your wealth that way, you can. And that's all we're set out to do.
So what does that onboarding process look like? You sign up, you create an account, you
Yeah, it's
attach
super
your
simple.
yeah, walk
Is
us through
it,
that.
well, I mean, so imagine you're going to sign up for any other financial app, right? You're going to basically create an account. You're going to get it set up, customize it so we know our customer and you know what the product is. So there's disclosure and kind of setup configuration. And then you're going to express your interest. You're going to say, this is what I'm looking to do. The app does that. I think a very nice job. We're always listening to feedback, but we think if you have any questions at all, we're always there. There's people that would love to talk to you. That's something that
So
we
it's like
pride
a
ourselves
survey.
on. Yeah, it's an application, right? So it's like there are so many places you could go borrow money for different reasons. There are lots of different people out there that will lend you money under some terms and conditions. And they're all bespoke and unique most of the time. And you really need to know what you're doing. So we are like that. We are a way that you can borrow money against an asset in a bespoke way that and requires that we're just showing you how it works, disclosing the whole thing, and walking you through it with the support that you need in order to get what you want out of it. And that's about it's about as much as I could say as it's technology, and it's about exactly what you should expect out of any kind of app, right? That's going to do what you need it to do in your phone or on a website or anywhere else. And if it doesn't do what you need to do, you can get some support, and we'll fix it real quick for you. And you shouldn't. That is not what you should have to learn. Like we're not here to have you learn crypto. That's not what we do, right? We will teach you everything we know about what we do, but we're assuming to some degree you're learning about the financial product of saving and or leveraging or investing. That's what we're assuming. We're not assuming that you're learning the technology. There are other people that can learn of the technology better than us if you want to learn what the technology is. We kind of wrap it all up and make it easy to use so that you don't have to.
Totally. And when you look out over the next 5 to 10 years, what scenarios make this more interesting? We're having rising or falling rates or, more government debt being added, maybe more adoption in crypto and the additional regulation I'm sure is a welcome. What do you think's most
Yes.
exciting?
So yeah, most exciting. I'll give you what I think is most probable and exciting. I think what's most probable is a baseline is that there will never be more Bitcoin created. I don't think that that's in the cards. I think that that breaks the promise of what it is. I think there will be more and more people that buy Bitcoin. Companies, countries, people. There's just going to be more people buying and holding and earning a fixed amount of something. The first ever infinitely scarce asset that humans have ever built and discovered, however you want to think about it. I think that is for sure. I think governments will probably create more money. I think there will probably be more people born into the world, and I think there will probably be more commerce that will evolve in more emerging markets. And I think there will probably be a lot more transactional volume and technology that kind of continues to probably build out a bigger and bigger and bigger infrastructure around the economy at large and money at large. And so those two juxtaposed, I think it's very probable that you'll continue to have one thing that people like to save and the other thing that people like to spend, and that there will probably be a great relationship between those two people, and oftentimes could be the same person, just at different parts in the cycle. Now, where I think it could get really interesting, as we've seen firsthand, I have the scars to prove that in the U.S., the policies can go one way and then they can go the other way, and they can not necessarily make sense why. So we could see some exciting reversals of policy that change the landscape that you always have to be prepared for, understanding the ground that you are on, and being compliant and understanding how to be nimble and integrate with it. I think what's probably more exciting would be if we see an arms race kick off with more companies that trigger more countries to want to buy and hold Bitcoin. What I've seen personally is that there have been more people who started seeing the same thing I saw and wanted to buy Bitcoin, and then continued to want to buy more Bitcoin and earn Bitcoin and hold Bitcoin. And that has continued to expand at a rate that far outpaced what I would have predicted is probable. It was way more exciting than I would have given it credit. And it was way faster and more rapid in a way. And sometimes you think, like, why hasn't this happened already? But really, it's been continuous. There's been a continuous expansion. I think that we have not seen that yet at the company level. Really, we've started to see it with some of the public companies. We haven't seen that game theory play out in different markets all the way. We definitely haven't seen the game theory play out at the government level. So where could it get kind of hyperbolic crazy? Governments start kind of competing to figure out how they're going to buy a bunch of Bitcoin, right? And how are they going to acquire it? And what's the best way to do it? And what's the policy that has to change in order to do that? And I think we've already seen that enough to know that that's probable. It
I
could
mean,
get
it's happening.
accelerated. It's happening. And so anytime you see an acceleration of something or kind of a volatile situation, which markets like to produce, you get a lot more excitement. So those are the things I think could be exciting. I think I'm most looking forward to just responsible policy that allows innovators to build and for the technology to integrate, for it to be a positive for America first, for sure, but humankind abroad, everywhere. I think that if we can improve a better, truthful financial system, we should. And I think if we can build with what we've already built and integrate and improve upon it, we should. So I'm most excited to see that that actually come true. I would love to see that we actually find a better financial future with hope and prosperity that people look forward to. I grew up being somebody who believed in the American dream and was excited about tomorrow more than I was today. And that drove me to want to work hard and to save. And that did a lot of positive things, I think. And I think that I'm most excited that we could be seeing more of that from a lot of angles, but with Bitcoin and innovation and just clear regulatory frameworks and people understanding what's a good way to do something versus a bad way, and just putting that aside and now just let the innovation build a better future. I'm excited about that. And I hope that there will be many more people that gain that future is better tomorrow, and that hope that you can have in the future. I think that's the dream that feels the best when you can wake up knowing tomorrow is going to be better than today.
You and I both, Shawn. You and I both. Shawn, this has been awesome. Thank you so much for joining me today. What's the website? Where can people go learn about Salt and learn more about you?
Yeah, no, thank you very much for the time. It's been an awesome conversation. Glad we got to make it up. Hopefully we talk again soon, and we talk to your audience, anybody that's made it this far. If you want to learn more, come chat with us. We're very available. www.saltlending.com. Pretty easy domain. Bitcoin lending. We're the first top rated that shows up. We're on all the socials too. My name's Shawn Owen. Easy to get a hold of. Probably on any social media. I just might not be very fast to respond, but I do like to respond eventually when I catch up. And I really hope that there's been some value here that people have taken away from this episode. It's felt like a great conversation. Would love to see if we can help anybody out on their journey with what we're here to offer. And keep doing what you do. I love the show. It's been great to kind of look at the cash flow and continue the conversation.
Yeah, man. Thank you so much, guys. And for all of those listening in, if you are coming to the best ever event happening in Salt Lake City here in February, let me know. Would love to meet up in person. And as always, thank you for tuning in on the Passive Income Playbook. We will see you next time.